Okay, so professors, we are looking at acquisition of fixed asset, where the business is buying a fixed asset. Now, you appreciate that you can buy things on credit, or you can buy things and immediately pay cash or check. So we need to look at the two scenarios where we buy the fixed asset on credit or we pay cash or check. So now let's do the analysis for when you purchase the asset on credit, right? When we purchase the fixed asset on credit. So let's look at that first, then we'll look at the check or cash later. So dear professors, if you buy a land, assume you or see yourself as a business and you buy a land or an equipment or a building and you don't pay, so you bought it on credit. Please, what are the two effects, I should say, on your asset capital liabilities? Please, who is answering that for me? You buy a land on credit, meaning you didn't pay. What are the two effects? Okay, let me call Prof. Eugenia to share her thoughts. Prof. Eugenia. Prof. Eugenia.
Yes, sir.
Yes, can I hear you on that? Share your thoughts. You buy a land on credit. What is the impact on your asset or liability or capital?
Sir, please increase in liability.
Eugenia, I didn't hear you.
Sir, please, I said increase in liabilities.
Increase in asset and...
Sir, please, I said increase in liabilities.
Okay, but we are looking for the two effects. So yes, liabilities are going...
And increase in assets, which is the building.
Okay, thank you very much. So I think she gets that accurately. So when you purchase a fixed asset on credit, there's going to be increase in asset and then a corresponding increase in liability, simply because you didn't pay, right? So the asset could be land, building, so you state the name of that specific asset, and the liability becomes the creditor, right? The asset creditor. So if the name of the creditor is given, you must as well use that, okay, for in terms of opening or preparing your account. So we go back to the principle again, which says that if assets increase, we debit, and if liabilities increase, we credit, right? So in this case, we are going to debit the asset, and then we'll credit the liability, which is the creditor. So let me put an example here for us to try. On 15th February 2024, X Limited bought a land for $2,000 on credit from KKK or KK3 Estate Limited. Okay, so dear professors, let's have a try on this one. On 15 February 2024, X Limited bought a land for $2,000 on credit from KK Estate Limited. So what will be the effect? And then we'll move on to open the two accounts. Prof. Augustine Akoli, tell me the effect first, then we'll look to record in the T account.
Sir, please, I didn't get your question.
So the question is, this is the transaction. This is the transaction, and I want your response on the effect this transaction will have on the asset, capital, liabilities.
Yes, so it will be increase in assets and increase in liability. So increase in asset land.
Okay.
And increase in liability.
Okay. So increase in asset land and then increase in liability. And here the creditor is KK3 Estate Limited. Okay. So in terms of preparing the account to debit and credit, you pick your account from the analysis you have made. So we conclude on this point that the two accounts are going to be land account and KK3 Estate Limited. Okay, so these are the two accounts for which we will debit one and credit the corresponding or the other one. So let me see how we do the recordings here. So permit me to copy two accounts from here.
At the ocean. Suddenly, she saw someone swimming toward.
Okay, so one of the accounts will be land account, and the other will be KK3. So as we have applied the principle, we are supposed to debit the asset, which is the land, and we'll credit the liability, which is the creditor KK3 Estate Limited. So the currency is dollars, so always make sure to use the right currency for your account on both sides, the debit and the credit side. Okay. So in the land account, we do a debit using the date 15th February 2024. The narration will be, or details will be KK3, which is the other account, right? Then we put the amount there, which is $2,000. Then we credit KK3 Enterprise. Same date, 15th February 2024. The narration will be land. The amount is 2,000. And that is it, right? Okay. Please, any question before I move to the next? Okay. Now, if we look at the scenario where we pay cash or check, we buy the asset, but this time we paid cash or check. Then, professors, you agree with me that there's going to be increase in assets, okay, and a decrease in another asset. This time, cash or bank. We use bank if we pay check. Okay. So increase in the asset you are buying, so the land or building or whatever asset. So it could be land or building or any other fixed asset. So per the double entry principle, again, you have to debit this particular asset and then you credit your cash or bank, depending on which was used in the transaction. If they use cash, you open the cash account and credit. If they use check, then you open bank account. Okay. So I get the sense that you appreciate these things, so I may skip some of the examples so that we can be able to cover the remaining transactions in today's class, right? But if you have questions, you prompt me and ask. Are we good to continue, professors? Okay, so I take your take your silence for positive response. Okay. Let's look at the next transaction from the list, and that is acquisition of a loan. So the business is going to take a loan, right? So acquisition of a loan. If a business is going to take a loan, right, the loan will come in the form of cash or maybe a check which will be deposited into a bank account, right? So from the onset, the first thing you can talk about is that there will be increase in assets, which is cash or bank. Because the loan may be received in cash or it may be given to us via a check, right? Good. So the asset, cash or bank will increase. And you know a loan is a liability, so there's also going to be increase in liability loan. Right. So in terms of opening your T account or ledger account to record this, you would open the cash account or bank account, depend on which medium you receive the loan, and then you open your loan account as well. Now, if you analyze it, the asset will be increasing, so we'll debit the asset and we'll credit the loan account, which is the liability account. So, professors, is that okay? Good. The next one.
Yes, sir.
Thank you for the response. The next item is settlement of a liability. So the business is going to settle a liability. For example, a loan. The business is going to pay off a loan or maybe pay off a creditor. And we know creditors are also liabilities, right? So let's look at the analysis when a business is settling or paying off a liability. So it's simple. It's either you are going to use cash or check to pay off your liability, right? Because you can only make payment using cash or check. Okay, Austin, you have a question. Let me pause for you to ask your question. Go ahead.
Sir, please, can you hear me?
Yes, we can hear you.
Hello. Sir, please, I wanted to ask, maybe they don't say bought land on, they bought land, but they use maybe paid for, so it can actually, you see also the same thing.
Okay, I think I get your question. So you see, your main task is to identify. So for example, let me put such an example here for you. So they say paid for, let me add a date so that it will be more specific, or paid for land 15,000, paid for land 15,000 cash, okay, on 2nd April 2025. So you see a transaction like this, paid for land. The question you ask yourself is, what is land? Land is a fixed asset. So the business paid for a fixed asset. In other words, purchased or bought a fixed asset, right? So they might change the sentences, but the idea will be the same. Okay, so yours is to focus on the main theme or idea to determine whether it is this transaction or that transaction. So for example, like Akoli is asking, Austin is asking, if you see something like paid for land, 15,000 cash, then it means the business has gone to buy a land, but they paid cash. Okay. So don't get confused when they change the sentences. Austin, I hope that is okay.
Yes, sir.
Okay, great. So we learned a bit about settling of liabilities. Let me quickly do that before this session ends. So if you are settling a liability, you are either going to pay cash or check. And since you are making payments, your cash or bank account is going to decrease, right? Because you are making payment. So decrease in assets, bank or cash, right? And you see, you are paying off a liability. You are making payments. So, example, Mr. Amwa has a loan with GCB Bank. Okay, so the loan is a liability to Mr. Amwa business. If I make payment of that loan with cash, what it means that my cash is going to decrease. That's why you have decrease in asset cash. If I pay check, then bank. Again, the loan I have with GCB would also decrease because I'm making settlement. I'm paying off. So there will be decrease in liability, and that is the loan, right? So in terms of the principle, what are you going to do in terms of debiting and crediting? So as you see, I think I have to take you back. For the decrease in asset, we all know you credit. But when liabilities also decrease, what do? We debit, right? So you are going to debit the loan or the liability and you credit your cash or bank account if the business pays off a loan or pays any liability. So if it were to be a creditor, then there will be a decrease in that liability creditor as well, right? So when you open the creditor's account, you are going to debit the creditor because when liabilities decrease, we debit. I believe my professors have not forgotten the principle. Let me bring it on the screen. Yeah. So as you see it here, when assets increase, we debit. So definitely when they decrease, we are going to do what? Yeah, when they decrease, we credit. And when liabilities decrease, we debit. Okay. Let's move on then to the next one. I think I have some 5 minutes to do that. Payment of expense. Professors, I think I'll do this in the next session. Payment of expense and receipt of income. Okay. So please let's join the next session so that we continue from there. See you soon. Please let's all try and join on time.